All right, welcome as we share the USDA June quarterly stocks and acreage report. It will be released live here in about 15 minutes. Our Director of Producer Services, Brooks York, and Director of Ag Research, Sterling Smith, will provide expert commentary and share insights into the U.S. grain markets. The key focus on this report is the acreage, and we need to know what those numbers mean for all of us as we are in the midst of this crop season. So please use the chat or Q&A at the bottom to send us any questions or comments that you have. We have also put in there for you to share what state you're calling in from or watching from and what the weather and crops are looking like in your way. So please, without further ado, help me welcome Brooks and Sterling.
Hey, thanks, Christy. If my audio's good, if it's not, let me know, and I'll try to situate things differently. But Christy, I think it's a sure sign that I'm getting old. You know, in the DMO tonight, I'm going to write about there's things that happen in your lifetime where you remember exactly where you were and what you were doing. You know, I think about 9/11, of course, and whenever I was a kid in school, I think about that Challenger disaster. As I get older, I can tell you where I was at on the June 30th crop report several times, especially when the markets moved big. So we anticipate something big today, and we'll try to put this into a narrative to tell you what this means rather than just give you acreage. And Sterling and I talked early, and of course these numbers are plugged into a supply and demand table, which can affect us long term. The front and center. The numbers that are right in front of us, of course, are those acreage numbers. There's also some stocks numbers, and Sterling's got some really good commentary to talk about the stocks numbers, what we think we've got on hand. So there's a couple things here. You know, we've done the WASDE reports each month over the last few months. They've been awesome, good information, but the market is to a point right now that we kind of feel comfortable from an old crop setting. We kind of have an idea of what we're going to have left over in regards to beans heading into the next crop year, a decent idea on corn as well. So I think that part of the report, you know, we've got some comfort built in. We're going to get through. It's going to be tight. We're going to get through. So all of a sudden, this market, like so many markets, is 2 steps ahead of us. It's not so much the here and now. We're going to focus on where we're going to be in 12 months. There's a lot of ifs, ands, and buts out there. But as we get puzzle pieces of this information, we start to have more certainty. With more certainty, volatility comes out of the market little by little. So we're going to get some more of these puzzle pieces today. Let me paint a picture as to where this acreage matters. Sterling, I want you to kind of be able to jump in here. I'm going to share a screen real quick, and this is kind of a working screen, if you will, of an interactive spreadsheet. Nothing very fancy here, but this practically shows us what we're looking at. So, Sterling, you and I have been doing the WASDE reports, like I mentioned. The carry out, the market feels pretty comfortable. This carry out somewhere between 120 and 160 million. Do you kind of agree with that?
For soybeans, 120 to 160 is where we're going to be, assuming we don't have any weather issues. That's where we're tracking. And if we do have the weather issues, I think the market's probably going to take it out in price. Rather than taking, I don't see us coming in with an ending stocks number for soybeans, you know, sitting at that, you know, that 120 area. Below that, I really don't see it getting into double digits.
So, and actually, that's good that you mentioned. It's good you mentioned this is soybeans. I didn't mention this is a supply and demand table for soybeans that you guys can see on the screen. And of course, that 150 Sterling I was referring to was actually our carry out from this year going into next year. And
yeah,
so,
for this year, go ahead.
To kind of put the narrative together, if you can see on my screen and my cursor, we're looking at last year's numbers here. So this is the crop we planted 1 year ago. This is the crop we're planting this year. So the number that we're looking for, we feel pretty certain of this 150 million being carried in to the crop that we're growing right now. Sterling, we're going to look at this number right here. I've got 90 million plugged in here, and this is an interactive worksheet. So let's play around with this a little bit. Give me the Sterling Smith number that we're going to see here in 13 minutes. What do you think?
The average Wall Street analyst guess for soybean acres for this report is 89.1. I think we're going to come in at 89.9. I think we're going to be obviously above the 87.6, but given a choice, given the way the weather was, I think I tilt a little bit more towards seeing the corn picking up the acres and the soybeans picking up a lot of acres. So where you're sitting at there, and if we look at the number of harvested acres there, really, unless we see a big surprise, the soybean balance sheet I don't think is where the risk sits today.
Well, that's a really good point, and that's kind of what we wanted to illustrate. Regardless of where this is at, if this is 89.9, which would be on the high water mark, with a yield trend at 50, it puts us really right back where we're at. So what the market is going to focus on is how many acres next year can we switch over to corn safely, or switch to beans safely. So we're look at corn, because both Sterling and I agree, I think, Sterling, that this corn number is one of the market movers today. What are we thinking on this corn number before we go into this report? What's your guess?
Okay, right now we're sitting here with the range. The low is 92, the high is 95.8. Assuming we sit right at about 90, give or take a little bit for soybeans, I really think maybe that corn number comes in at 93.9. Maybe we get to 94. But here's the thing, those acres have to come from somewhere. Where are we going to take them out? Are we going to take them out of cotton acres, or are we going to take them out of wheat acres? That's, the real question here. If it comes out of wheat acres and it's the Dakotas, it's not going to be that much of a help for yields. You're going to have yield problems up there that we can be sure of. So how many more acres of corn we really get from that March report? Well, my confidence level isn't that high. I think we're going to come out of this with a market that's more nervous, with a little bit more clarity than where we are.
So if you're calling in and you can't see the screen, or we're showing the supply and demand tables on corn at this moment, we've plugged in 93.9. And essentially, with usage numbers on track, we're not going to even talk about those today, but usage numbers fairly static, tick up in ethanol back to normal. It gives us a carryout of about 1.9 billion, which is probably the high water mark, which signals these acres are going to change next year. It signals that more acres can go into soybeans. So what we're saying here is, between soybeans and corn today, we need to really look at this corn acreage number, because it really impacts how much flexibility we've got to go to soybeans in the future. And you can see we're probably going to build some corn stocks. We're going to increase these stocks in a year from now with the type of number that we see today. We got 93.9 plugged in. So I wanted to set that narrative out there, because we're looking for that corn number. Sterling and I both think that's key. Sterling, you mentioned something to me, and I'm going to turn this over to you. There may be a hidden factor in this thing, and that could be stocks. So I want to leave you with two questions, as we've got 9 minutes left. Tell us how this stocks report can change things. Also, I'd like to, I mentioned June 30th being one of those dates that we remember. Can you give us how the market's reacted maybe over the last 10 years to this report, just to kind of give us an idea? I know I'm putting you on the spot with two questions, but I think they're both important.
That's not a problem here. Yeah, as you can see on my screen here are the expectations for the quarterly stocks report. Now, every piece of media outlet, all the news I'm getting, everyone is talking about acres, acres, acres. Jim Cramer on CNBC was even talking about acreage. So my natural inclination to think is, well, if everyone's saying something, do the opposite. Where we may see the surprise is actually in the bottom of this box here, where we see quarterly stocks. As you can see, in June of 2020, this report came out, right at 5.0. Now, the low estimate of this guess is 3.19, and the range here is, here to kind of highlight this, is enormous. So if we see this number come in noticeably lower, that's going to affect the carryout, and that's going to have a ripple effect coming through that balance sheet. So this is another spot where we could have a surprise, and somehow the market always manages to find something that makes us look nervous and create, some jitters. So that is the first thing I'm really interested in to see, and where I think there may be a surprise. The other spot is these cotton numbers. Right now, we've got a pretty good range on here. If we're going to boost these corn and soybean numbers again, we only have so much space. We're not planting this stuff on the moon. Elon Musk has not figured out a way to do that yet. So somewhere, something's going to have to give to get to these, if all the high numbers come up, I don't know where we're really going to be able to plant all this stuff. So there's a lot of disagreement here, which sets the stage for volatility.
Sterling, I'm gonna remind everybody real quick. This is this cotton number. If you're down in the South, this is something that you've mentioned countless times over the last 3 or 4 months. That 12 number that we're seeing on cotton in March, it could be significantly lowered, which could bolster some prices here. So that's something that you've talked about now for 3 or 4 months.
Yeah, we see a continually better story with cotton. Reopening demand, the reopening story is staying in place. That's going to be very, very good for cotton demand. Cotton exports to China have been spectacular. So one, they think they're going to have to consume it. Two, they look like they're in a little bit of a restocking mode, because on a historic level and where China is coming in and bought cotton, cotton is still comparatively cheap. If we look at the fund position where they are with cotton, they're right in the middle of the road. There's plenty of room for fund buying in cotton. In fact, if you looked at what I wrote yesterday, there's plenty of room for fund buying in all of this stuff. We've seen the net active managed money in funds for corn drop almost in half since January. So there is powder sitting around here, and if we get a new story, the idea, we know acres are going up, but they didn't go up as much as we thought. And that should create some nervousness in here, along with if we see that stocks number a little bit lower than expectation. The Chinese are in here and they're still buying. And if you look at the export numbers and the export sales for next year, the Chinese are still here and they're still buying. Some of this could be coverage for problems in South America, but again, they haven't even planted that crop in South America, so plenty of nebulous things coming for next year. So I think we can leave this report probably feeling fairly solid here, and people will be working out their balance sheets shortly after this gets issued.
So I'm gonna jump in here real quick, because I don't want anybody to get the wrong ideas on here. The market has really already factored in a higher corn number and soybean number than what Sterling's showing up here on the USDA March report. You can kind of see that. That's where the survey results are. Sterling, a 92.5 number, if that's what's revealed to us here in a few minutes. That's not really looked at as a terribly bearish number compared to 91.1 because of the expectations.
92.5. It's going to be who let the bulls out. That's what's going to happen. That number, any number that's below 93.8 is going to be to a varying degree more and more bullish. And when you start to throw in, as soon as we look at this number, the balance sheets in the market are going to adjust, and all eyes are going to turn to weather and yield ideas almost instantaneously. And again, we have a whole new bunch of questions that Mother Nature has been dealing from the bottom of a very hostile deck with the weather. And when they break down and look, well, we gained all these acres, but there are acres in the Dakotas. Well, that's going to pressure yields noticeably. So, that's kind of where we're at with this right now, and we're all kind of waiting on the information. There's plenty of room to get some volatility brought in here, and the markets are coming in here. I'm looking at corn right now. We're down 16.25. Beans are down about 20 cents. So the markets have managed to get themselves over the last couple of weeks into a pretty oversold condition. So if we see a sudden rash of fund buying, right now the funds are net long. There's plenty of fund shorts in there that may get covered. So we should see a pretty good amount of volatility coming out of this.
So Sterling, I'll jump in here because this is a great time to advertise one of the services that we provide. we got the action indicators out there, and you mentioned that oversold condition. One of those action indicators is RSI. And RSI, that relative strength index on corn and soybeans, you mentioned is lower. It got down into the low 40s a little bit. And that tool, we're really doing some good work on it. It's going to be widely available here in about 30 days for our customers out there. And it's something that everybody needs to get to that Apple store when the time is right and download. A really simple way to look at momentum, like you mentioned, in indicator number 1. But something we're looking forward to getting out to everyone.
Absolutely. And if you look at and read the Tech Tuesday reports that I put out, the stochastics for corn and soybeans are deeply, deeply oversold right now. And stochastics is kind of similar to RSI. The only one that's giving a nice, clear bullish picture is actually the cotton. So we know when these markets get stretched like this, a reversal is quite probably coming. And, pollination is just around the corner here.
So we look at your scoreboard here. We're going to pay close attention to this actual number, correct? That's where these numbers are going to start to fill in. So when you look across here.
Yeah, in this category right here, the actuals, this morning, here's the ethanol reports that came out showing what the ethanol production and everything were for the week. So right in here in about 15 or 20 seconds, we should see these all populate right in here. And the big ones right here, obviously, being corn and soybean stocks, corn, soybean, and the cotton acreage are the things I think the market is most cued on right now. And here are the survey averages right here. So 93.7 is the average for the survey, and we should be getting these numbers any moment now. And there's your quarterly corn stocks number. Came down a little bit on the bullish side. Look at that corn number, 92.6. Soybeans, 87.5.
Wow, look at the markets
go. Beans are up 30 cents, and corn they're up 36. I would expect corn to be limit up on this. Soybeans, they have those big expanded limits in there now. I think we're definitely going to be pushing that button. The cotton number came in right in line with expectations. So the quarterly stock for soybeans, again, a little bit under, but not enough to scare anybody. And the corn number, this is all, again, those big acreage ideas, not so much, especially with the soybeans.
Sterling, I'm going to steal your screen just for a split second to let everybody watch this trade.
Here, if you like, I can.
Definitely one that we're going to remember. You see here corn at 40 now on these, and we've got beans up touching in near 70. So a lot of green numbers. We look in the wheat complex down here. Here's Chicago wheat up around 20. Seeing the same thing out in Kansas City. Minneapolis, either I haven't got a good feed on this, which would be my guess. Sometimes Minneapolis feed is a little bit behind. I'm showing red, but the big story here is corn and soybeans. Both of those acreage numbers, just not enough to kill this market, which I think, Sterling, you kind of had that feeling going into this report that that's what we might see.
Yeah, I'm looking at, my balance sheet right now, and I'd kind of thrown in a 93.5 number, which is close enough for government work. And assuming we get that, we're probably talking 85 harvested acres, and with a yield at 173, that takes our carryout down to 1.1. So, and that's operating on a reasonably normal export number and a reasonably soft ethanol number.
Let's revisit those spreadsheets that I showed earlier, okay? And just to kind of narrate this a bit more, and remember what we talked about. We wanted to find excess corn bushels so that we could switch acres over to beans. This 93.9, 92.6, is that the number, Sterling?
92.6 is your planted acreage, and figure we harvest 91% of that.
And let's take a yield. And I think right now, let's just give them the benefit of the doubt. I think probably the market has got a 174 to 176, but let's look at a 176. You can see with usage numbers fairly strong. 1.3 billion. We didn't build anything. We didn't make much ground up on corn. Therefore, we look at this soybean number, and the number there, Sterling, help me out, 80.
The number on the soybean planted is 8907.
89. I'll just put 89 on the nose, and you can see we're just we're treading water here. 108 million. This number somehow, some way has got to grow for next year. The market does not feel comfortable here. A few things can happen, and of course we don't know a lot about yields, but a few things can happen. I'm going to flip back over here to corn, and we're going to just for 20 seconds here, Sterling. The one number that I think that is most concerning at this point in time, knowing where this acreage is at, of course, yield, which we won't know for a bit, but we get down here into usage, and we start looking at this ethanol number. We had a Supreme Court decision last week, and you and I briefly talked about this. The one number that could be in jeopardy from a usage side is ethanol. I think more and more the market starts to look at some outside factors. Tell us what could happen in ethanol based on some court decisions.
The court decisions, I'm a lot more concerned about that affecting biodiesel than it is ethanol right now. We're talking about small refiners. We are not talking about those big operations down in Houston. We're talking about small refiners and blending requirements. At the margin, it could hurt ethanol consumption a little bit. Kind of depends. Are we going to make that back up with more people driving and a little better travel numbers? Easy enough to make that number back up. The real number we need to talk about here is exports. And are the Chinese going to be in here? And are they going to buy the corn like they've been buying it last year, this year? Are they going to be buying it next year? That's going to be the number that moves the needle. And fact of the matter is, China doesn't mind what they're paying for corn here in the U.S. They don't care. So that's going to be the number that I'm really going to be watching more so than seeing a big change in the ethanol number. Where we can heal that soybean balance sheet maybe a little bit might be with the soybean oil bit, but we're going to crush every bean we don't export. That's it. That's just how that's going to go. So whether or not that causes an offtake in the soybean oil, I'm not that worried about it. I don't think we're going to have a shortage of salad dressing. We'll put it that way. So that's really the numbers and where we're at right now with that. And the fact of the matter is we don't have enough dirt and enough acres to grow all this. And that is going to put an upward pressure on prices globally. If we see yield problems in the U.S., which I don't see how we can have a record corn yield. I just don't see that in the books. I'm going to probably be working with like a 173, 174 number is a realistic number after I take a look and see where we actually gained all these acres. My guess is if we didn't gain them, we didn't magically grow the state of Iowa, these acres came from places that are going to be marginal, and that's not going to help these yield numbers. So that's where I'm going to be looking at it from this point of view here. So, it's really going to depend on those Chinese exports and how much corn the Chinese want to take. And, don't expect price sensitivity from China. Don't worry about negative hog margins in China. The Chinese government cares about an outcome. They don't care about the money. They've got plenty of money, and if not, they'll just print more. So what we really need to concern ourselves with here right now is going to be yields going forward, I think.
So, any weather event we see here over the next 2 or 3 weeks is going to really, really be a market move. And even these forecasts out 6 to 10 days, we know from the virtual crop tour, we know from our WASDE calls, I'm like Bon Jovi. We're living on a prayer up in the Dakotas and Minnesota, parts of Iowa. You've got to have that continued rain, and the odds of us trying to get those weekly rains. And while Illinois looks pretty good as a whole, I mean, they really had those I wouldn't say crop saving rains, but they had sufficient rains. There's these flaps, and I read an article yesterday, it's the wings of the Corn Belt that really haven't got those sustaining rains. And I'm kind of right here on the verge in southern Illinois where we've really got to have the rain go forward. Sterling, you're kind of on one of those wings up in Omaha going north. the odds of us getting those on a weekly basis to make this thing a record crop just don't look very strong right now.
No, I'd be long pickup truck dealers here in the Omaha area. We've got irrigation. We've been okay with the rain, so we're going to probably have a good crop and good prices. You go north of here, the further north, as soon as you get out of that irrigation area and you start moving in the Dakotas, the forecast is calling for a high-pressure ridge to move in. It's going to get hot, and it's going to stay hot. I don't see how we can fix that for corn. You know, soybeans are a whole different matter, but that entire, let's say the first two northern tiers of counties in Iowa going north into Minnesota, up into the Dakotas, a big problem. Something else we need to think about for the soybeans. They grow a lot of canola up in Canada. There are serious problems there. You know, that land north of the Dakota isn't getting any rain either. And tightness in the canola market can help the soybeans out here again, because China does import a lot of that Canadian canola, and we see that there could be additional pressures into the soybean market from that as well.
Sterling, one last thing, and I've got a question that came in here across a text message from one of our listeners. We're seeing this, if you look at this trade right now, we're seeing new crop beans up 82. We're seeing old crop up 78. Does this signal a narrowing of that spread? Do you think this market now focuses more on new crop than old? Do you think those spreads will narrow even further?
Okay. The July futures, today is June 30th. July futures go into delivery tomorrow. If you're in a July soybean contract or corn contract, please exit that contract, or you may find yourself in a very unpleasant situation. As far as the focus now, the focus will be entirely on new crop for the board. It will be December and November. One thing with the soybeans we need to keep in mind, we see in here we have these August bean contracts. If you've got early soybeans, that could be very, very golden for you. But again, the focus will be entirely now on the new crop, simply because any changes in the old crop, which are very unlikely at this point, will automatically be reflected in the new crop balance sheet when we get to WASDE here in a couple weeks.
Yeah. And that's a concern for some farmers. Some farmers, that spread. I know we get a lot of fringe areas, especially in the South, where that September-December spread becomes pretty important on corn, and that September-November spread becomes somewhat important on beans as well. So good comments there.
Yeah, and
well, Christy,
this is something. One other little thing I'd like to point out: the last couple of times we've had new crops or old crop stuff come into delivery, we have seen excessive and unrelentless volatility and illiquidity in these things, with these things moving all over the place. So again, if any of y'all are trading futures and you are in those July contracts, I'm not saying this because I like to hear my own voice. Get yourself into something else soon.
Yeah, good advice. Good advice. Well, Christy, I think we've had an exciting day. It didn't disappoint. We thought maybe we would see a number and the market would react and we'd go back to trading weather. That wasn't the case. We saw a number that actually is going to sustain us here for a little bit. So it didn't disappoint. This one was a fun one. But
I
think
definitely two very surprisingly bullish numbers. Yeah.
So we appreciate everybody tuning in, and we love bringing you this information live, and it's fun to see how the market reacts and adapts to different situations out there. So I'll give it to you, Christy, to give us the conclusion and send us off down the dusty trail.
All I can think is, who let the bulls out, right? Would that be appropriate song today? Anyway, I want to thank you all for attending today's live report. It was, like Brooke said, it did not disappoint. Today's webinar was recorded and will be available in an upcoming DMO or on our YouTube page. Hey, Brooks, real quick, somebody has asked if you can show the current markets. Would you or
Sure.
Sterling mind putting that up there?
Sure. I'll got it right here.
Great. As he's pulling that up, just want to let you know, if you have any questions, please feel free to send those to us at marketinginfo@sampointernational.com. That has been placed in the comments, and I'll put it in there again. But we really want to thank you again for joining us today. So here are the markets. And so Brooks and Sterling, I am going to let you guys end it up today.
Yeah, so basically we're looking at corn here. We're going to transition, like Sterling said, to the September D's. We're seeing SEP trade at 5.99, December trade at 5.88. To illustrate Sterling's point, you can see the big inverse between July and September, the 7.34 and 5.99. Those will be going off the board relatively quickly. We switch over to soybeans here. Again, this inverse is not what it was a month ago, but we're seeing July coming off the board here at 14.37, new crop at 13.92. We'll transition to the August, and we're here at 14.16. So that inverse is not nearly as pronounced. The market is going to start to really focus on these new crop months. Wheat in Chicago, we're up about 22, 24. So a modest gain here compared to corn and soybeans. In Kansas City, really about the same thing, up about 20 cents. There's opportunities that abound on here. And while Sterling and I are bullish, we're always careful to mention that profitability is the #1 aspect on your farm. You know, we saw a little bit of doubt creep into the markets over the last 2 weeks. That doubt is going to come back in at some point in time. As we get closer to South America growing a crop, we're going to start looking at their acreage. If we see a sneeze out of China, like Sterling mentioned earlier, in regards to exports, the market's going to look at all that stuff with more volatility than we've seen over the next 6 months. So let's not take our aim off of profitability. Lots of opportunities to actually make sales and protect those sales for upside. So we definitely don't want to let this bullish sentiment be confused with inactivity when it comes to marketing. But well, that's a good last look at the markets here, Christy. And we're seeing, again, beans up 85. That's kind of the high water mark of the day.
And one thing I'd like to say, remember, it's a bullish market, but we want to treat it like a cow. Let's make sure we milk this.
I like it. I like it.
Now I have to tweet that.
Yes.
Well, I'm glad I gave you 2 sound bites here. So
You did. Well, thank you all again so much.